Hello and welcome back to the Moneycontrol live stream. You are watching markets with Santo and CJ. Well, as we feared, bulls were unable to hold on to the gains in the morning as we head towards third successive day of losses in the market. Nifty 50 and Sensex are both down by about 0.5% each.
We still have half an hour, CJ. So
I have given up hope, Santos. I don't think yesterday also we were hoping.
That's a good sign.
We were hoping that we could probably get a little bit of that bounce so that we could close in the green territory, but that does not seem like happening today as well. In fact, we are actually giving up more ground as we speak. But the main carnage, it seems, is in the mid cap and small cap stocks. The second line stocks are taking it on the chin right now, with the benchmark indices there down about 2.5 to 3% at one point of time. Apart from that, if you look at the sectoral performances, IT, metals and reality stocks, including auto as well, they are the one who are leading the laggards at this point of time. IT sector, the Nifty IT index is down about 3.5% in trade, largely after Nomura joined JP Morgan, right, in downgrading the sector, downgrading a stance on the sector to underweight, indicating that growth is likely to slow down in the coming year. So things are looking very, very ugly, Santo.
Right now, CJ, the only bull on the IT sector is you.
Yeah,
even
absolutely.
all the brokerages,
not the only. I mean, come on. There are
even the
others
brokerages which were cheerleaders for the sector have given up. But CJ here feels that IT still has it.
The only caveat is that these brokerages are waking up after a 30% fall in the in the sector already. So I think they are a bit late into the party of downgrading. Maybe they should have done this a month or two ago.
Now, it is complete mayhem right now. We're seeing that in the small and mid-cap stocks particularly. If you look at the Nifty, the benchmark indices, the fall is not that steep, but just look at individual stocks. They've taken quite a beating. And CJ, it's a expected script that is playing out.
Your expectations?
I wouldn't say that. Now, see, the beating most investors have taken in steel stocks, the market retail investors were very heavily exposed, many of them, HNIs, big traders. So they've lost quite a packet there, and now what they're trying to do is probably offset the losses that they have suffered there by booking profits wherever it is available. Right. So you have one story after the other taking a knock. You've seen that in sugar stocks, which took a big beating yesterday and today also. We are seeing a lot of selling coming in fertilizer stocks also. There's some concerns as to,
Well, Santo, for all of that fear around retail investors, I was just looking at some data for the April month, and despite the sell-off that we saw from FIS in April, retail investors actually came back pretty strongly in April and invested more than 21,000 crores into the market. So I don't know if retail appetite is losing at this point of time. Maybe HNIs, maybe DIs to an extent, who knows, given the slowdown in the pace of their buying. But I think retail is still holding on to the fort and is still believing in the funda of buying the dip at this point.
I wouldn't say that they made a strong comeback. Probably they have, they were trying to average out their holding cost. That said, 3 weeks is a big time in the markets, anywhere for that matter.
But I would expect it to continue in May as well. I think so.
You see, the market is not so. I just saw forward. It was on WhatsApp.
WhatsApp University. Forward.
Yeah, WhatsApp University. Wow. But it did make sense. It said that what we are seeing is not the market collapsing on heavy selling pressure. What we are seeing is sudden cessation of buying, which is now causing prices to fall pretty sharply.
If you look at it, Santo, I mean, buying has still been happening, right? There's not been a price capitulation. I mean, in fact, CLSA came out with a note saying that this could be the slowest bear market in history, probably in the last 30 years at least, which is basically the much of the data that you get in the Indian market. The last 30 years, this is probably one of the slowest bear market, if at all it is a bear market, although technically Nifty has not crossed the 20% hurdle yet. But if this is a bear market, then this is the slowest, because never before in history has the index taken 7 months to fall from the record high, fall about more than 15% from its record high or more than 10% from its record high. So that goes to show that this is largely a tussle between the sellers and the buyers in this market, and some days the sellers are going with the upper hand, and some days the buyers are going with the upper hand. And what we have here is a 3,000 point range, which basically leaves you nowhere. but except for frustrated.
But look at the damage which has happened in many of the mid and small caps.
True.
Even if the slower the bear market, the more frustrating it is, and towards the end you will see even much sharper
this is
sell
going
off.
to test patience. That said, now let's dive into some of the stock actions which are also testing patience of some investors, but also giving opportunities to others.
So TVS Motors, this is one stock which the fourth quarter numbers were not all that great. However, there are quite a few things going in favor of the stock at this point in time. Overall, CJ, I think there's too much pessimism which is built into the two-wheeler space, and deservedly so, rightly so. But probably it could be overdone. So if you were, beginning to build a portfolio from a medium to long-term basis, then probably two-wheeler stock is something that you should be looking at. TVS Motors here, okay, one thing which shields TVS Motor from the other two-wheeler companies is that it's got a lower exposure to the entry-level bikes, which have been the hardest hit. That's one. Secondly, the company is investing very heavily into the electric vehicle space. It's got a number of launches lined up. So these factors put together, I think, and the fact that the stock has corrected a fair bit makes it a decent buy.
But Santo, the demand environment still remains sketchy, right? I mean, with inflation rip-roaring the way it is, not only in urban areas but in rural areas as well, demand for me is becoming a concern. While a lot of analysts are bullish that we could see volume recovery in the second half of the year, but I am still holding my cards to the chest because I want to see that evidence come into the monthly volume data probably from June, July onwards. Then only we'll be able to see whether demand is actually going to come back for two-wheeler segment, because that has been within the entire automobile pack, that has been one segment that has been hit the most by the pandemic. Apart from that, if you look at the sort of outlook that is coming for rural demand as well, things are not really looking that great. I mean, a lot of the FMCG companies pointed it out that rural demand is seeing a lot of pain at this point of time, largely because incomes, although they have grown, but they have remained stagnant over the past 1 year, and at the same time the cost of goods are going up, not only for farmers, but not only in terms of their production inputs, but also in terms of what they're consuming. And therefore, at this point of time, consumers in rural India are showing more a preference for paying off their debt and paying off their loans than doing any sort of discretionary consumption at this point of time. That said, one stock that is looking pretty bright in this market is Aditya Birla Fashion. The company recently raised about, if I'm not wrong, about 2,000 odd crores from GIC by selling a part of its minority stake in the company, and largely that capital is meant for enabling the company to grow or expand its services going ahead. A lot of its stores, such as Pantaloons and all, it wants to aggressively invest in that front and expand its retail footprint across the country. Now, if you look at, prior to this stake sale, Aditya Birla Fashion was talking about 21,000 crores in sales or top line by FY26, but now expectation is that the company will be able to far exceed that target by FY26. So therefore, sales could be in excess of 25,000 crores according to some estimates out there. Apart from that, CLSA has also upgraded the stock to buy. It believes that the aggressive stance that the company has taken in terms of expanding its retail footprint is happening at a very, very opportune time in the industry, and therefore the company will reap a lot of benefits. And therefore, in a market like this, when you are providing such a good growth outlook and also some evidence to back it, investors are willing to reward it.
Well, CJ, after you told me that this is one of your picks for the day, I've been trying to get hold of some negative research report on this, and I have not been able to come up with even a single one.
Not surprised by that.
So, everyone right now is bullish on the stock. The fourth quarter numbers were better than expectations,
Right.
which is leading many people, many analysts in fact, to believe this story. The company is still to turn corner. It's still loss making, but it's in good company. All the comparable companies are also in losses at the moment.
Yeah, because of course this quarter was the March quarter, that is, was also affected by the pandemic, although not as much as the second wave, but the third wave did have a marginal impact.
So the stock price has been holding pretty well, which means that there are too many believers in the story. And according to me, when there are a lot of believers in the story, the stocks, it doesn't crash exactly, but it tends to stall because everyone who knows the story has already bought into it, and now you're waiting for fresh set of buyers. So I'm not negative as such on the stock, but what I'm saying is that here it's suddenly become a very crowded trade. Too many people are believing in the story, so maybe you could see the stock kind of stagnate for a while.
I don't think it has still reached the levels of, say, IT sector back in January or steel sector back in August or September. I think there's still room left in the retail space, especially in individual counters, for a lot of upside to happen, and you will see that happening over the next 6 months because earnings still have not followed through, right? Expectations have built, but once signs of earnings turnaround also come, it will also bring a lot of the fence sitters like you to on board. So I would, if the fact that somebody like you is still skeptical on the story proves the point that not everybody is on board
I'm
yet.
a minority, CJ.
That is okay. Minorities is all that matters for that next move, right?
MRF, the next stock on the watch list. Now, the fourth quarter numbers were disappointing. That's been the case with most.
Very disappointing.
Yeah, that's not surprising here, and given the way input costs have been very high, and that's been the case for all tire companies in general. But this is still a play on the impending recovery in the auto sector. Auto sector has underperformed for quite a while now, and I think at some point also the high input prices. You would see that those high rubber prices and everything stabilizing after a point. It's been rising, be it crude, be it any of the input into the making of tires. All of them have been steadily rising. Now, this can't go on endlessly. At some time, it will stabilize. So, probably this is then probably a good time to start looking at the stock afresh.
Yeah, just like TVS Santo, I think this is another stock that I would want to hold my cards to, closer to my chest, because as I said, in the case of TVS, MRF being an auto ancillary, demand environment still remains. It has to still prove that it is on the path of revival. Plus, margin concerns are not going to go anywhere, right? Crude oil prices are still top north of $110 per barrel, and they are showing no signs of easing despite the China lockdown, despite US recession fears. Oil prices have not come down yet, and since they remain elevated, therefore margin pressure will remain elevated for this company in the coming quarters. Apart from that, even if you were to take the case, okay, maybe the sector has seen a correction, so maybe it is the right time to buy into a low valuation or below mean valuation. MRF should probably be second or third on the list if you even want to play the tire sector, right? Because despite the correction, it's still more expensive than many of its smaller rivals. And if I were to really look for an upside in this sector, I would rather bet on the smaller rivals than bet on the big guy.
When the cycle turns, probably it is the big guys who start benefiting first.
But the smaller base of the small guy always gives you
it is not very expensive.
Returns.
So Motilal Oswal, in fact, has said that the company will be able to, the brokerage is neutral on this stock, but it has said that the company plans to hike prices in the replacement market where it's seeing good traction. And also, the brokerage has raised its EPS estimates for MRF for both FY23 as well as FY24, but you're not seeing too many earnings upgrades. That said, fair enough, Motilal is still neutral on the stock, saying that present prices capture all the valuations.
And I would expect Motilal to stay neutral at least till the time there is actual signs of recovery.
Till the time probably CJ changes his mind. Yeah.
Talking of tactical plays out there, Santo, Lumax Industries emerging as a good tactical bet to take in this market. I would still say longer term issues remain because there's another auto ancillary name. But if you look at the Q4 earnings, they were much resilient than what the market was expecting, given the overall outlook around auto sector. But the resilience in the earnings actually has heartened investors a lot, and the stock rose on the back of that today. If you look at the technical charts as well, the stock has given a tactical breakout today, a positive breakout on the on the daily charts. So that is something that should boost the stock performance going into the coming weeks. And apart from that, HNIs are showing a lot of interest. If you speak to dealers, a lot of HNIs, wealthier investors are taking positions on the stock, given that the stock has corrected decently over the past 1 year. So from a tactical point of view, this is one stock that I'll be watching out for. Although from a longer term point of view, you might want to wait another 2 quarters in terms of earnings performance to see that actual turnaround happen.
Well, one can't, wait till you actually see that in the numbers. By that time, the stock
price. That is why I said, tactically right now, now is the time to move. Now is the time to move on.
Yeah, there's just one thing that makes me a little cautious, in this market where exit is becoming more important than entry. Lumax is a highly illiquid stock.
Right.
Okay, trading volumes are pretty low, and you don't know how long the market will stay this way. Unless you are in it for a very, very long haul, I would be wary of anywhere where any stock where the floating stock is very low, and that itself could sometimes whenever panic sets in, result in a steep
That is
erosion
a
in
genuine
prices.
concern, Santo. But I think if there are panic sellers out there on this counter, then
CJ will
probably
just
from a
come in there
tactical,
and buy all
from the
everything that is in
tactical
sight.
point of view, from a tactical point of view, if there is a panic seller out there thinking that, oh, I have to get out because this is an illiquid stock and I will not get an opportunity, better opportunity tomorrow, then yeah, I mean, those who want to take a tactical position on the stock may want to enter it.
Yes, a quick look at the market before we move on to the last stock on our watch list today. Nifty at 16,027, that's down about 100 points. But the big selling really is in the mid cap.
And small cap.
Big
yes.
losses in fertilizer stocks. Chambal Fertilizers, Coromandel Fertilizers, among the big losers. Stock is down by close to about 8%. IT stocks are again under pressure today.
Yeah, among the gainers, Santo Container Corp is higher by 6%, say 6.5%. This is largely after news came out, there could be some changes on the land leasing fee, and that could be beneficial in terms of the divestment of the company.
I think they heard you. Yesterday you were saying that there's still uncertainty over the land leasing fee,
and there's
right?
some clarity emerging there, it seems, and Cabinet is also expected to approve that change in policy, or that could really help in the divestment process. Apart from that, Hindustan Zinc is higher by 2% after CNBC Awaaz broke the news that the government is looking to divest the entirety of its about 29% stake in the company. Although Vedanta's chief, which has the majority stake currently, has indicated that they can only purchase up to 5% in the stock. Apart from that, V-Guard Industries, Oil India and Godrej Agrovet are the few other stocks that are in the green, while almost 92 stocks on the index are actually in the red at this point of time.
Godrej Properties, the stock has fallen quite a bit. It touched a high of about 2,500 last October, and since then it has been steadily declining. Probably that is one reason that investors could look at it from a long-term perspective. Also, it's got a strong project pipeline for FY23, about 21 million square feet, and even beyond FY23, it's got executable projects of close to about 78 million square feet. In its earnings call, the management said that it's looking at pre-sales of about 100 billion rupees this year itself. So, this is a stock probably one should keep an eye out for.
Well, but the macro environment is not looking very pretty, Santo, for Godrej Properties or for any real estate company at this point of time, given the RBI's change in stance, the fact that they want to so aggressively tackle inflation. The RBI governor recently already indicated that a rate hike in June is a no-brainer, right, after the 40 basis point rate hike. So, in a rising rate environment, this could deter potential buyers, from going out and purchasing those homes. Apart from that, if you look at, Godrej Properties, there is a possibility that execution risk could be high, rising, even though the company is looking to launch more projects.
That's a risk for every real estate company,
because
CJ,
the
come
cost
on.
of construction is rising, right? And even though the government has taken steps to curb steel prices and all, but let's not forget, cement is also a major part of the cost metric or cost table, right? And that there, it seems there is no reprieve. I mean, we have had some cement companies indicate that if they have taken price hikes in April itself. So that is why cost of construction being so high, margins are going to be something that will be under the lens from the investor's point of view. Apart from that, if you look at the technical side of the stock, Santo,
I knew you would come to that
absolutely,
at some point.
I have to. This is a stock where the daily and the weekly indicators are blinking sell at this point of time. So this is one place that probably I would not want to get into.
Well, CJ, this is my argument to you. If you say that, see, this is a market, what's happening in mid-cap stocks right now, right? If you look at the technical indicators, you would be missing the trees for the woods, right? Every single stock is showing either a death cross or any kind of cross
Santo,
that you may.
These are not stocks which have already seen massive amount of price capitulation, right? They're in the process of seeing that capitulation. So trying to catch a bottom right now would not be that advisable, right?
Well, can we say how much deeper the stock price are bound to fall?
Exactly, you tell me.
Only posterity will tell, right?
You tell me, right? Exactly my point. So that is why I would want to play the trend. I want to play the momentum and I want to play the trend. If the momentum is on the downside, I'll play that. If the momentum is on the upside, I will play that. Right now, being a contrarian in this market is only going to get you butchered in the middle of the street, right? We have seen that with the bulls, we have seen that with the bears.
You need to be selectively contrarian, but that said, enough of stocks. CJ, tell us something.
Well, this is not going to make a lot of bulls out there happy, but could you imagine that just like the 2010s basically, could 2020s, which was supposed to be, the gala decade of for investors, could it also turn out to be a lost decade for global equities and emerging market equities, right? Now, in a recent blog post, basically, that Vanguard, one of the biggest fund managers out there, put out, they generally tend to keep, bring out their expected returns or expected nominal returns from various size of equities or various kind of equities over a 10-year period, right? Now, if you look at the table in front of you, they are expecting about 2.8 to 4.8 nominal returns from US equities, 5.7 to 7.7% returns from global equities, and emerging market equities are expected to give only 4.3 to 6.3% annualized returns in the next 10 years. Now, remember, this is not adjusted for inflation. Now, even if you were to assume that Indian equities would probably outperform emerging market equities by 2 to 3 percentage points, that brings you in the return range of about 6 to 8%, right, Santo? 6 to 8 or 8.5%. Then, if you assume that inflation will stay around the RBI's target of about 4 to 5%, that means that on an annualized basis, Vanguard expects that probably in the next decade, you could only see equity returns of 3 to 4 or maybe 5% at best, which could be, if you look at it from current FD rates, be much lower than the fixed deposit rate, Santo. So that is why there is, and the reasons for these are multifold, of course, right? We are entering this decade with record high valuations, right? Just the way we entered the 2000s with the burst of the dot-com bubble and when valuations were at record highs. Similarly, when your entry point is at such a peak, it has such a perch, you generally would see downturns or you will see lower return environments in the following years. Unlike in the 2010s, right, when for US equities, valuation towards the end of towards the end of 2009-10 were actually at their bottom because of the global financial crisis. Buying equities at that point of time made a lot of sense because you were buying them cheap. And if you look at the next 10-year performance for US equities, they gave annualized returns of in excess of 16%, right? Which was better than what India gave. We gave annualized returns of about 8 to 9% only in the previous decade. So that is why there is a growing chatter within the market that given the high inflationary period, given that interest costs are rising, and given that we have entered this decade with very high valuations, we could be in for another lost decade for emerging markets and global equities.
Well, there goes Professor CJ. Now, TK, CJ, all points taken.
Thank you.
But, having seen quite a few bear markets myself, what happens is typically when the bear markets, set in and when the bull market ends. Now, here we don't know for sure if the bull market has ended, but at least there are indications of that. Suddenly you have all these reports saying, okay, now this is the end of equity. I mean, I've seen even dire reports.
No, nobody is saying it's an end of equity. This is not Bloomberg magazine in 1981, right?
No,
this is
it is as good as death of equities. If you are going to tell me that I'm going to earn 6% or 4% returns from equities over the next 10 years, why wouldn't I put my money in FDs, right?
Exactly
so that's as good as saying that
but this is true. This has held true for Indian equities, right? If you look at it from an absolute point of view, the last decade, right? Everybody will say on an absolute basis, the Nifty has risen 200%, 150 to 200% from 2009-10 to 2019-20. But if you look at it on an annualized basis, equity returns were only 7 to 8%. In fact, in some instances, actually gold ended up beating equity returns on an annualized basis. So you have to sometimes question the narrative also. A lot of times, people get driven by narrative, as you always keep on telling me on my ear that don't go by narrative, don't go by narrative. You have to question the narrative. I think that is what Vanguard and a lot of other commentators in the market are also trying to say, that this entire, euphoria around, if you remember in 2020 and the early parts of 2021, everybody said that, the last time the pandemic happened, we ended up having the roaring 20s and therefore this is the decade for equities. But evidence is suggesting something contrary, right? And that is all that I'm trying to say.
See, previously, SIPs were not such a big component. Now, if you see over the last many years, people are investing through SIPs. So, if you look at this annualized, returns between 2009 and 2022, maybe then 7% fair enough. That is, if you were just, bought at that point and then held on. Here, you're continuously, you're buying at every level, every month. Okay, that makes a big difference. So, I don't think it is very fair to look at it in that way. There is too much pessimism out here. We don't know how things will play out. Fair enough, Vanguard is Vanguard. I won't dispute that really, but I would look at things a little more differently. I mean, it pays to be a little more optimistic, I would say.
Possibly. I am optimistic anyway, so that is not a concern for me.
So what do we have on the horizon, CJ?
Well, we have the FOMC minutes coming out today, the latest monetary policy of the US Federal Reserve that happened, the minutes of that policy meeting will come out later today in the evening. Apart from that, on earnings, you have Hindalco, Z Entertainment, and Motherson Sumi coming out with their Q4 numbers. So that is something to keep your eye out on. And apart from that, you should also keep an eye out on Moneycontrol and the Moneycontrol's YouTube channel, as we bring you live coverage of the World Economic Forum at Davos. From the ground, we will get you ground zero reports and live updates throughout the evening. So do stay tuned for that as well.
Well, CJ, just on a closing note, I was just looking at this Interglobe Aviation stock, which is down by about 200 rupees, 12% roughly. Now, aviation stocks, I think they've held on to they kind of vindicate the general theory, Warren Buffett's theory that their complete wealth destroyed. But it also makes me wonder, whether we should be having a SIP kind of approach to stocks as well, which is what retail investors do that for mutual funds, but they don't do that for stocks.
No, but a lot of, I think brokerages are also getting into nudging investors towards doing SIPs into stocks. The only trouble is that if you want to buy a stock like MRF, for example, you would probably have to do an SIP on a monthly basis of 1 lakh crore to even get one stock, right? And that is where the only concern comes in, because if you have only 5,000 bucks and you want to buy an Infosys or a TCS, you may barely be able to buy one stock at a time, right?
So maybe then that stock split to attract retail does make sense, because
Maybe.
if you look
Who
at
knows?
Interglobe, over the last the time it was listed in 2015 till date, it's up by just about 50%. But there have been plenty of opportunities, sharp upswings and then sharp drawdowns.
That is why I
as
keep
well.
on saying, time the market, Santo.
Yeah, I think I should learn from you, CJ.
Thank
Well,
you.
on that note, it's a wrap on this edition of Market with Santo and CJ. I hope you enjoyed watching it. Do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial market news, stay tuned to moneycontrol.com and the Moneycontrol app. We'll see you tomorrow morning sharp at 9 a.m.
Thank you.